In this video, I'll answer the question, what is day trading? Hi, I'm Pete Stolzers, and I've been a professional trader for almost 20 years. When I meet people for the first time, I'm often asked, what is day trading? Most people have heard about it, but they don't really understand it. What is day trading? Isn't it like gambling? It's not like Vegas, where you place a bet on red or black. That's a game of chance, and the odds are stacked against you by the casino. If I'm in a 50-50 scenario, my upside better be much greater than my downside. When you play roulette, your upside and downside would be equal if not for those two little spots on the wheel, the zero and the double zero. If you add those in, your chances of winning are maybe 47% or so. You will lose money if you play that game long enough. However, to continue with that gambling analogy, yes, I could say that trading is a lot like being a professional poker player. But I have to make this distinction. I said professional poker player, not someone who likes to play poker and is good at it. I'm talking about professionals. These guys calculate probability, they observe behavior, they look for quirky little patterns, they vary their bet according to probability and expected returns, and they know when to fold a losing hand. There are professional poker players who consistently make money. They don't play casino games where the odds are stacked against them. They play a game against other players where they have an edge, much like trading. Have you ever met a professional poker player? I haven't. There aren't many of them. And by the way, there aren't many professional traders either. What is day trading? Don't day traders make a ton of money? And don't they have fast boats and airplanes? A handful of traders make it big, but think about the scores of people who start their own business. Some of them make it big. Day trading's a business, and the barriers of entry are really low. For day trading, all you need is a wallet, and you can pull a chair up to the table, open a brokerage account, and you're good to go. Apart from trading capital, your startup costs are very low. Plus, you don't need to have any employees. Here's a word of caution. When it's that easy to start a business, the competition is going to be fierce. All you need is a set of golf clubs to be a professional golfer, right? Millions of people love to play golf, but there are only a handful of professional golfers. The barriers of entry are very, very low. So there's going to be lots of competition. There are many traders who make a decent living day trading. It's a grinded out job where your income depends on your performance day in and day out. So it can be very blue collar in many respects. You're only as good as your last trading day, and you can't afford to have losing days. What is day trading? Do people fail? Unfortunately, yes. Most people who try to day trade will fail. Well, how can this be? I mean, think about it. It should be easy. If you had $100,000 in your account, and if you bought 100 shares of $100 stock, you should be able to make a half a point. There are lots of $100 stocks. Make a half a point on a $100 stock. That should be easy. And if I do that, that's $500 a day, and there are 250 trading days in the year approximately. So that would equal $125,000 a year. Wow, that's a good living. Well, here's the rub. Let's say that you come in one day and you have a bad day. Uh-oh, I lost $500 today. Ah, geez. Well, that means that tomorrow you have to make $500 to make back what you lost. You have to make $500 to make the $500 that you were supposed to make the day before, and you have to make $500 today. So now all of a sudden, with one losing day, You have to make $1,500 to get back to square one. Now you can see how difficult it is and the fact that you cannot have any losing days or very, very few of them. Professional traders can make a good living, but it's not as glamorous as everyone makes it out to seem. What is day trading? Isn't it working for yourself and being your own boss? If you're quitting your job because you hate your boss, that's fine, but don't become a trader because if you're not prepared for this, you're really going to hate your new boss. If you've been laid off, don't look at trading as a possible bridge while you're between jobs. It takes a long time to develop these skills, and the money won't come anytime soon. Even if you've traded before, you don't know if you have the skills. Believe me, everything changes when trading becomes your sole source of income. There'll be an incredible amount of pressure to make money every day, and scared money never wins. If you're retired and you're looking for a new hobby, start slowly and don't blow your retirement savings. So, don't quit your job. If you've got a job and you think this might be of interest to you, learn how to invest and learn how to swing trade and read, read, read. Start with a long term market perspective, hone your skills on stock analysis and technical analysis, and then gradually you can work your way into technical analysis and shorter time frames. I'll tell you, when the market hits a new all-time high like right now, there are lots of new traders who think they've mastered this profession. They don't know how to trade the short side, and they've never had to trade a flat market. Some of them have found early success and they'll watch this video and they will rip on it because they've found success for the last couple of years under ideal market conditions and they know everything. Believe me, you're going to have your pants pulled down around your ankles. It's just a matter of time. It's how you respond to that experience that'll determine if you have the right stuff. What is day trading from a work standpoint? The hours are long, and if you think you can do this for 6.5 hours a day and then turn off the lights, you're wrong. There's constant analysis, earnings reactions, economic releases, foreign markets, other assets like credit markets, reviewing your trade logs, reviewing your positions, looking for tomorrow's trades. I start my day at 5 a.m. Central Time, and it's rare for me to work less than a 12-hour day. There's continual learning. You have to read as many books as you can and watch as many YouTube videos as you can. Find the ones where you feel that the trader really knows what they're talking about and look for someone who has a systematic approach. I referenced some really good books in the description below, so make sure to check that out. Talk to other traders. Make sure that you review every trade and you learn your own strengths and weaknesses. This is not a 40-hour a week job. What is day trading? Do you talk to other traders? You don't have a lot of face-to-face interaction like you do with other professions. And let me tell you, when you're losing money, day trading can feel like you're out on a island. And it's easy to isolate yourself, especially when you're failing and you don't know how to turn it around. By the way, I should mention that I don't have anything on in the background when I trade. No news, no TV, no radio. I am a purist and I watch price and volume. I don't want to have any outside influences or distractions. Besides, the talking heads that you see on most financial news, they don't know what they're talking about. They try and associate every wiggle and jiggle with a current news event, when oftentimes the move in the market is just a matter of supply and demand. What is day trading? Do you ever get happy when you have a big trade? Yes, of course I do. And there's certainly many times of joy and excitement. It's important though to keep your joy contained and to move on to the next trade. I do remember one of my happiest moments. It was in the October of 1989. It was the mini crash. I had some Pepsi puts that I had bought for a quarter of a point. Yes, a quarter of a point. That was way back when options used to trade in sixteenths and eighths and quarters. And I remember that option going to $6. I was getting my master's degree. I didn't have a lot of money. And yes, I was dancing on the table. I've had my share of great trades, and that was one of my favorite ones that I can remember because it got me hooked. And so, yes, there are some really exciting times. What is day trading? And have you ever been depressed by it? Oh, yeah, more times than I'd like to admit. And when you're scraping by, and you start the day off well and you give it all back, it is super depressing. The money that I put into endless programming for my trading system was depressing because the rewards were nowhere in sight and it was cost after cost after cost. So, yes, all of these struggles, yeah, it can get very, very depressing and very, very lonely. What is day trading, and do you ever get angry? Oh, yes. Oh, yes. I got angry when I was long futures and tweet dropped the S&P 500 30 points. That cost me thousands of dollars. The tough part about taking a loss like that is that when it happens so suddenly, you're reeling from your loss and you don't have the guts to join the move. I took a big loss and then I watched the S&P 500 sell off for the rest of the day, and I knew that I missed an opportunity there, but I just had to shoulder that loss. When I look back at moments like that, sure, I'm angry, but those are unusual situations and they happen and they can't be controlled. But when I really get angry is when I don't follow my rules and I lose money, or when I miss something in a trade that I should have seen. That's why it's so important to review your trades every day and to do your research. What is trading? Do you ever have any doubts? Oh, yes. When I lost 80% of my trading capital in 2002 and 2003 in a slow market that just drifted lower every day, my world was crumbling. I'd been in the brokerage business for 13 years. I'd worked on the trading floors in option execution. I knew traders. I rode elevators with them. I talked to them. I studied. I knew the failures. I'd seen it on the retail side. I'd spoken at many trading conferences. Yeah, I'd been all involved in trading. I was not going to let these same mistakes happen to me. We were preparing for war with Iraq, and the market was like Chinese water torture, just ticking so small every day, and then little short covering bounces. Plus, we had just come out of the tech bubble, so there was a lot of selling pressure, but compression, compression, compression. Every day I was leaking oil, and I lost a lot of money. I couldn't pay my bills. I have 3 children. I have my wife to support, all of us. It was an incredibly tough market. Yeah, I was shattered. I knew the risks going into it. I'd seen many traders fail. I wasn't going to let it happen to me, to myself, but guess what? It was happening. What is day trading, and have you ever felt like a fool? For years, I was embarrassed when my friends and family would ask me, "How's the trading going?" I'd be truthful, and eventually they stopped asking. It's also humiliated when I had to tell my wife how much money I'd lost in 2003. That was a low point for me, but I didn't give up. I'm even embarrassed right now sometimes when I have a bad trade because I have to tell all my members and because my YouTube subscribers get to see it. Let me tell you, it's hard enough to face your losses when you have to see them yourself, but it's much harder when you have to post your trades and your losses publicly. What is day trading and how do you know when you're going to make it? Well, for me, it happened in 2003 when we invaded Iraq. The market released like a coiled spring, and all of my hard work paid off almost instantly. It was like shooting fish in a barrel. Trading is the ultimate challenge. Until you've gone through this process and until you've decided that you're going to learn from your mistakes and do everything possible to be successful, you won't know if you're going to be a good trader. You have to be humbled. Only then will you have true respect for the market. This is an emotional, financial, and psychological roller coaster. You'll learn who you really are and what you're made of. Sometimes that journey has a happy ending, sometimes not. Remember, there are a small percentage of people who make it, and you have to be willing to do what others are not. You have to do your research, and you have to put in the hours, and you have to learn, learn, learn. Speaking of learning, you're going to learn an awful lot about yourself. What is day trading? Aren't you swimming with the sharks? Oh, yes, but I'm the little fish. When the sharks eat, I eat. I respect the sharks and I stay close to them. I know that if I stray too far, I'll become their next meal. Well, what is day trading and who are these sharks? Most of them are large banks and trading institutions. They have so much capital that they don't day trade. They invest on a longer term basis, and I can't compete with billion-dollar research teams. So, when these companies conduct their long term fundamental analysis and they decide that it's time for asset reallocation and they start moving in and out of stocks or in and out of different asset classes, that's when they leave a trail of breadcrumbs. And that's when I can track them. I have searches that help me identify these changes in price and volume, and they reveal exactly what these large institutions are doing. This is what day traders do. They trade both sides of the market. They buy low and they sell high. Well, everybody knows that. That's easy. But they also trade the short side. If they feel that an asset's going to drop in price, they sell something they don't own with the promise of buying it back in the future, hopefully at a lower price. This is called selling short, and it's something that novice traders are very uncomfortable doing. It's a skill that you must learn. So, selling short will help you see both sides of the market. It's something that you should get used to doing if you're thinking about becoming a trader or a day trader. And there will be times when the market is moving lower and the trend is lower, and you have to be able to sell short. Well, what is day trading? Do you trade commodities? I don't trade commodities, but many traders do. They trade oil, gold, corn, copper, pretty much anything. So, absolutely, they trade commodities. I personally don't. Stocks. Are stocks a day trading vehicle? Absolutely, and that's what most people think of when they think about day trading. Now, this is my wheelhouse. This is where I have a specific advantage. I look for volume spikes, I look for relative strength, I look for price patterns, and I use a variety of different technical indicators. Foreign currencies. Absolutely, day traders trade FX, it's called. Foreign currencies account for three, or they don't account, but they are $3 trillion a day business, meaning there's $3 trillion worth of foreign currencies that change hands. These are large corporations, they're large institutions. Foreign currencies are the most liquid market in the world, and it trades 24/7. So, yes, absolutely. People trade currencies. In fact, you can even trade futures on Bitcoin. I don't, but you can. The S&P 500, the most liquid futures contract in the world. Yes, I definitely day trade it when there's a good range, and I've developed an indicator that tells me when to buy and when to sell. I know that I need to nail market direction every day, so yes, I'm watching the S&P 500 because 75% of all stocks follow the market. I need to get this piece of the puzzle correct. But once I have the market right, I usually shift to stock where I know I have a really good edge and a higher probability of success. So I use my stock positions as a surrogate market position. The main thing about day trading all these instruments that I've shown you is liquidity. And that's a common factor. It has to be a very, very liquid contract with a very tight bid-ask spread so that you can easily get in and out of positions because you're going to be doing that a few times a day, maybe even more than that. Well, what is day trading and are there special rules? Yes, there are. A pattern day trader for equities, stocks, and futures, SPY, ETFs. So that's an equity account. A pattern day trader gets in and out of the same position 4 or more times in a 5-day period. And a day trader's got to have at least $25,000 in the account in cash or securities to trade equities. And a day trader is allowed to margin day trades at a 4-to-1 ratio. That's much better than the 2-to-1 margin that's extended to investors with a margin account where they plan to hold overnight. So a stock day trader can purchase $100,000 worth of stock during the day if they have a $25,000 account. Now, these same rules and regulations don't apply to futures traders, but there are all sorts of other regulations that you need to be aware of for any market that you might be trading. And it could even be tick sizes and limits and things of that nature that you need to be aware of. Again, you don't want to be blindsided. You better learn all of this information before you get involved in that particular instrument. What is day trading from a time perspective? Well, the trades typically last from 15 to 30 minutes. Some trades can last all day. It really depends on market conditions. Some day traders look for positions that make a sustained move during the day, while others are simply looking for a quick nickel or dime. Now, that type of trading is called scalping. By definition, day traders will be in and out by the end of the day. Most traders swing trade and day trade. Now, personally, I like to look for stocks that set up well on a swing basis, meaning a 2 or 3 or even a week or two basis, and then I day trade it. And I like to do that because then I know that I have technical indicators that are lining up on a longer term time frame and a shorter term time frame. So for instance, if I've got a stock that's trending higher on a longer term basis and I see a pullback intraday, I know that I can buy that dip with the notion that the underlying is going to join that longer term uptrend. So yes, I do like to have an opinion on a swing trading basis before I day trade it, but it's not absolute and that's not something that you must have, but it's something that I prefer to have. So you're in and out of positions. For most day traders, they're probably going to do at least 3 or 4 or 5 trades a day. Some day traders that are scalpers may do 15 or 20 trades a day. What is day trading and what do you watch? Well, a day trader has to be aware of everything. You can't afford to be blindsided by a scheduled event like an economic release or a Fed statement or a Fed speech at a convention, a press conference by the president, or a host of other events. You have to watch earnings releases and economic reports, litigation outcomes, clinical trial results, foreign economic releases, bond auctions, credit conditions, interest rates, other markets, foreign currencies, bonds. You have to be aware of everything that's happening during the trading day. For instance, I always have a 5-minute S&P chart running. And I've often thought about trading in terms of an NFL quarterback. You have a snapshot for a few seconds before the play starts and a few seconds after you have the ball. It's awareness that distinguishes the really good quarterbacks from the average ones. Preparation elevates that awareness. And I feel that it's the same way for traders. You develop a sense of awareness for all the influences, and then you can make snap decisions with confidence. What is day trading? How do you know when you have a good trade? Well, probability is very, very important when you're trading. You want to make sure that you have quantified your potential rewards and your potential risks and what the probability of making money is. Now, you don't have to go and crunch numbers constantly throughout the course of the day. This is something where you, again, develop an awareness. It's an experience that you go through where when you recognize certain things, you know that this is going to be a good trade. So here's a charting example, and I'll tell you a little bit about the setup, and you'll see the thought process that goes into it. I have an overlay of the S&P 500 on this chart. This is the gray line labeled SPY, and this is what the stock is doing. And so if I looked at this trade, I would say, okay, there's a general uptrend happening in the underlying stock. I have a compression right here in the stock, and I know that the market is trending lower. And you can see how the market's right over this blue box, market lower, 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 stock flat, flat, flat. If the stock were going to retrace with the market, you would see the stock pulling back, but it's not pulling back because there are buyers. Buy, 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 buy. Every time the market's pulling back, they're buy, 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 buy. When the market finally does find support, which it does right in here, off of that support level, you know that as the market starts to move higher, this stock should lift off. This is a high probability trade, and you could assess a 60% probability of making $5 on the trade and a 40% probability of losing money at $1.50. And this would be my stop out point, and this would be my game plan, so that if the market went up and the stock dropped down below this upward sloping trend line, I'd have to be out of the trade and I might lose $1.50. If you crunch the numbers, this trade has an expected positive expected value of $2.40. That's how it works. When it moves up, you eventually take your profit at your target level. Probability is critical. You must know your upside rewards and you must know your downside risks. So yes, very, very important. And yes, we do know when we're getting into a good trade. I can also show you a trade like this where you've got a compression. You have a long candle that closes near its low. This is a bearish engulfing pattern signaling that there will be a move lower. Yes, this is a good short. Comes down to a major moving average. Good time to take profits. Get out of the trade. Move on to the next trade. Big, huge bullish engulf, not a bullish engulfing, but a huge reversal off of a low here. You can see how the stock put in a new low and closed on its high. This would be a sign that there are better times coming and that this should be a major support level. 1, 2, 3. So now when you look at a chart and you see this particular candle, you know that you've got a downward sloping trend line that's been breached to the upside. You have a major moving average that the stock's been able to get above. You have a long green candle closing on its high above another major moving average. This would be a high probability trade that you can get into. So you let the upside run and your stop would be right there. Very contained, minimal downside with very nice upside. That's how it works. That's what you go through when you're a trader, and recognizing those types of patterns is critically important. What is day trading? Do you have a system? Well, when I refer to system, I'm describing really a process, a rule base. So this does not have to be an automated trading system, but discipline is super, super important to a day trader. And it is the one trait that is common to all successful traders. You have to establish a trading rule base and you have to stick to it. When you hit a stop on a losing position, you have to get out no matter what, no matter how painful it is, and no matter how confident you are that the trade is going to work out. So, here would be an example of a possible trade. You come in, the stock has been super hot, really wants to push higher. You get this long red candle closing on its low, and you think, awesome, there's my entry point to get long on that, which incidentally, I would never buy on something like that. I'd have to have 2 or 3 tests of that low before I would even try something like that. But let's say that you do. And you see this bullish hammer right here and you go, oh, look, they tried to sell it and it bounced right back. Now it's going to run. Well, it tries to recover a lot of this long red candle. You can see it runs, 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 and then it gets spanked right back down again. Well, this is an inverted hammer or a bearish hammer. If you were a disciplined day trader and you saw that formation right there, you'd go, nope, I'm out. I'm out. There is a lot of resistance up there. This stock is not ready to run. Then you move a couple bars forward. Okay, here we go. Another little attempt at trying to get back up in here, and it's followed by a bearish engulfing pattern. So it engulfs this little green bar right here. It engulfs every other little green bar in here, and you have a new closing low for the day, or a new closing low, not necessarily for the day here. That's a warning sign. You got to get out. Take your lumps, take your stop, get out of the position, look for the next trade. Oh, but no, I really like this stock. I like it. I think it's going to go higher. It just needs a little bit of time and then it'll go up. Uh-oh. God dang it. Here we go again. Oh, man, look at that thing fall. Oh, here it goes. Here it goes. Now we're okay. Yeah, yeah, yeah. Yeah, that's what it needed. Just needed. Yeah. Okay, it should move. Uh-oh. So, that's all right because I like this stock. I'm going to carry it overnight. It'll rebound, no problem. That's not day trading. But that's what a lot of people do. They can't take their losses. They can't admit when they're wrong. They're not disciplined. They don't monitor their stops. They make exceptions. No exceptions. Follow the rule. You must get out. What is day trading? Are you entering and exiting trades all day? Well, the answer is yes, but only when conditions are right. This is a classic mistake for novice traders. They feel like they have to be in a position all the time. If they hit a big winner, they want to be in another trade right away. Hit another big winner. You have to wait for conditions to set up. They're ever changing. What happened 20 minutes ago is not the same as what's happening right now. If you're not patient, you're going to lose your money on low probability trades. So let's take a look at this chart and I'll try and give you an example of patience. So you have a nice big rally in the stock and you want to join this move. So I'll buy any pullback that I see. And so here we get this pullback. Oh, this is nice. This is nice. This is better than I hoped for. Oh, this looks great. Oh, there we go. Bullish engulfing pattern here. Yeah, 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 yeah. We're going to bounce up in here. So you buy in here, and then the stock starts to pull back down. Oh, I've got a new closing low. Uh-oh, that was my stop, was that low right there. I'm not going to let this one fool me. I'm going to get out. I'm going to be a disciplined trader and exit the trade. Okay, I'm out. I took my lumps. Oof. Then you get this nice long green bar closing on its high. Oh, dang it. Oh, here it goes. Ah. And so the lesson here would have been you've got to be patient. You had no visible support here. You had to wait for that support to be established. You tested a second time. Now you've got that bullish candle and you've broken through that downward sloping trend line. Now you've got something to hang your hat on. And if you buy right in here, you know your stop is pretty close at hand. If you enter here, could have a couple of up bars and then the bottom falls out. Ooh, you don't want to be in those situations. So, as the trade unfolds, if you are long and you are a patient trader, you watch the stock come up and you're thinking this is the previous high. I need to take my profits in here. Oh, yep, we dipped below that. That's a failed breakout. I'm out. And you also recognize as a trader that, hey, this is getting pretty late in the move. We've got one pullback, two pullbacks, a third one that's really long. That tells me that this price action is getting pretty tired in here to have a pullback that far off the high that lasts that long. Again, this comes with experience. But so now you get this breakout. Well, the guy who exited the trade back in here and wished he was still in the position is looking at this breakout and going, I'm in, I'm in. And they buy up here only to get flushed out. And you needed to wait to make sure that that breakout was going to hold. And for some traders that would look at this and say, hey, I want to get short up here. Well, this is not where you want to get short because you could have a little pullback like that and then the underlying skyrockets higher. And now you'll have to stop out for a loss. But if I see this and I recognize that we're late in the game and we've got this little mini rally, I'm already looking for a lower high double top. I've got a downward sloping trend line. I've got this red candle. They could not get through that prior high. Now I've got a really decent trade setting up because I was patient. You get short here, you got your stop there. Yeah, everything's coming together. You must be patient. You have to wait and wait and wait for things to set up. So that is something that cannot, unfortunately, be learned. That's something that is inherent to you. And there's an old market adage that I want to share with you. The second mouse gets the cheese. That is the epitome of patience. And I have a note on my desk and it says, be the second mouse. What is day trading? Doesn't everybody see the same thing? Yeah, actually, we do see a lot of the same things, and there are a lot of technical indicators that are used, and some of them are even self-fulfilling prophecies to a degree, like major moving averages. Everybody looks at those as magnets. There's support and resistance. But as a day trader, you have to be super creative. You're competing with the smartest minds on the street, and they have infinitely more capital and resources than you do. So any edge that you can develop is going to increase your odds of success. I spent 10 years developing a day trading indicator for the S&P 500. There were hundreds of iterations and lots of failures before I finally got it right. It was a very costly process with no guarantees. So market conditions are always changing and you need to adapt quickly. What worked yesterday is probably not going to work tomorrow. What worked last month may not work 6 months from now. So you constantly have to be adapting what you do. Day traders and all traders need to be very creative. This is my day trading indicator. I'm proud of it. I'll show you how it works. You've got a bullish crossover right here. This is a good entry point. You have a bearish cross right there, but you don't have a breach below horizontal support here, so you stay with the position. Come up here. You've got a bearish cross now. You have an upward sloping trend line that's been breached. You have to get out of the position. You can short up in here. You have a pullback in here. You have a bullish cross. Cover your short. Get long. Now all of a sudden, because you've got this downward sloping trend line, so you're long in here, you ride the trade higher, you've got a bearish cross, enter the trade here, you're short, you've got a lower high, you can still stay in the position. That's how it works. And this squiggly little line right here looks like absolutely nothing. 10 years went into that squiggly line. So it's something that I use and it's something I've created, and a lot of traders have their own little systems that they've developed. So you have to put time into that. I've put unbelievable, countless hours into developing that and other systems as well. Game plan. What is a day trading game plan? Every day you need to get your market bearings and you need to put the current day into context. That means that you have a number of different scenarios that could play out. You have to decide which ones are the most likely to play out and how you're going to react to each one of them. On a micro basis, every trade has a game plan. Your entry, your stop, your target. Time is even part of the game plan for me. And if I have a trade that I've gotten into and I'm expecting a big move to happen right away, and I'm sitting in that trade for 5 or 10 or 15 minutes without that move happening, I know that every minute that ticks by, my probability goes closer and closer to 50-50. and that's not what I want. So I'll exit the trade, even though it's not a loser, even if it's a small winner, just because I've stopped myself out on a time basis. Consistency. What is day trading and can you make money consistently? Consistency is the goal of every trader, and this is when the light finally goes on. For novice traders, reaching this point could take years. For most people, they never get to this point. Not for day trading anyway. You can invest and hang on to losing positions for a long time and do okay, but when you're day trading, consistency is very, very hard to come by. The nice thing about it is that once you have it, you can quickly scale up, and that's when you can really make a great living. Now, consistency for a day trader, for me, it means hitting 80% of your trades. You've got an 80% win ratio. Ideally, and yes, your winners should be much bigger than your losers. Consistency also means having less than a few losing days a month. What is day trading and how do I know if I can do it? For some of you, day trading will end in disaster. I hate to be so frank about it, but there are very few professional traders. You see a lot of videos, you see a lot of books, you hear a lot of people selling secret systems and methods. It's super, super tough. If you're going to try it, make sure that you're passionate about it and that you're willing to read books and study charts for 12 hours a day. It's an emotional journey. It's filled with anger, depression, self-doubt, financial distress, humiliation, solitude. This is not a hobby, and it's not a way to make money when you're between jobs. I suggest getting really good at market analysis and stock analysis for your investments. Then hone your technical skills. Try and shorten your time horizon to a week or a few days. These skills will transfer to day trading. Consistency is the most important thing. The primary difference between swing trading and day trading is that you don't have overnight risk when you're day trading. And with day trading, you have to be right instantly. With swing trading, you've got cushion for a few days, maybe even a week to be right. You don't have that with day trading. You're going to be in and you're going to be out of trades today. So things need to happen right away. But the rest of the skills are pretty transferable. What is day trading success? Well, it could be the mansion on the mountain overlooking the ocean. I didn't mention happiness and self-satisfaction anywhere in this video, and I should. When you become a successful trader, there are a lot of rewards beyond making money. Personally, my biggest reward is the self satisfaction of knowing that I endured the toughest challenge of my life and that I'm able to make a living doing something that most people fail at. Trading has also taught me to be extremely true to myself, and I'm able to admit when I'm wrong. I'm brutally honest, and I attribute all of that to trading. This journey has taught me more about myself than any other experience in life. I have yet to meet another successful trader who has not been humbled by the market. So before you get started, know that that lesson lies ahead. How you respond to that crushing moment will determine if you've got what it takes. If you're thinking about this career, and this video has helped you gain a clear understanding of what lies ahead, please post your comments and your experiences. I promise I'm going to reply. I'm Pete Stolzers, and if you want to watch me day trade, you can take the free trial at www.oneoption.com. Thanks for watching. Good luck.